Welcome back to the psychology of execution. In our previous session, we talked about the fuel of execution discipline. We discussed how to build a machine that runs without the need for motivation. Today, we are going to look at the software that runs that machine. We are going to discuss the fundamental difference between the amateur and the professional. It is a shift in perspective, so profound that it changes everything about how you view a loss. We are going to talk about thinking like a casino, not a gambler. When people hear the word trading, they often associate it with gambling. And in a sense, they are right. Both involve risking money on an uncertain outcome. Both involve probability. Both involve risk. But there is a critical distinction. In the world of gambling, there are two participants, the player and the house. The player is stressed. The player is emotional. The player prays for luck. And eventually, the player goes broke. The house is calm. The house is mathematical. The house relies on statistics. And eventually, the house takes it all. To succeed in trading, you must stop being the player. You must become the house. Let's visualize this. Imagine you are walking through a casino in Las Vegas. Look at the roulette table. There is a man betting his entire paycheck on red. He is sweating. His heart is pounding. If the ball lands on black, he is devastated. He feels like a failure. If it lands on red, he screams in joy. He feels like a genius. Now look at the pit boss standing behind the table. He is the representative of the casino. Does he sweat when the ball lands on red? Does he cry when the player wins a big hand? No, he is completely indifferent. He doesn't care if the player wins this specific spin. He doesn't care if the player wins the next 10 spins. Why? Because he knows the math. He knows that the wheel has a green 0 and double 0. He knows that statistically, over 1,000 spins, the casino has a 5.26% edge. He knows that while the player might win the battle, the math will inevitably win the war. This is the mindset you must adopt. The gambler is obsessed with the outcome of this trade. The casino is focused on the outcome of the next 1,000 trades. When you think like a gambler, every loss feels like a personal insult. It feels like you made a mistake. It hurts your ego. You try to win back your money. You start to tilt. But when you think like a casino, a loss is not a mistake. A loss is simply an operating expense. Think about it. Does a casino owner get angry when they have to pay the electricity bill? Do they get angry when they have to pay the dealer's salary? No, it is the cost of doing business. You pay the expense so you can keep the doors open to make the profit. In trading, your losing trades are your electricity bill. They are the cost of doing business. You must pay them willingly to keep your edge alive. This brings us to the concept of probabilistic thinking. Most humans are bad at probability. We crave certainty. We want to know, will this stock go up or down? The honest answer is nobody knows. Not me, not you, not the biggest hedge fund in the world. But you don't need to know what will happen next to make money. You only need to know that over a large sample size, your edge will play out. If you have a strategy that wins 60% of the time, and you lose 3 times in a row, the gambler thinks, my strategy is broken. The casino thinks this is just variance. The probability will align soon. This is why risk management is not just a rule. It is the foundation of the casino mindset. A casino never risks its entire vault on a single spin of the wheel. They have table limits. They ensure that no single player can bankrupt the house. As a trader, you must set your own table limits. If you risk 50% of your account on one trade, you are a gambler. You are flipping a coin with your financial life. But if you risk 1% or 2% per trade, you are the house. You are ensuring that you can survive a string of bad luck, long enough for the math to work in your favor. Let me ask you a question. Can you detach yourself from the result of the trade you are in right now? If you click buy and the price immediately drops, can you look at it and say, interesting, instead of, oh no? Can you accept that a losing trade can still be a good trade if you followed your rules? This is the hardest part of the casino mindset, separating the process from the result. For a gambler, a good trade is one that makes money, and a bad trade is one that loses money. For a casino, a good trade is one that follows the rules, and a bad trade is one that breaks the rules regardless of the financial outcome. If you break your rules and make money, you should be terrified. That is a bad win. It reinforces bad habits. It turns you back into a gambler. If you follow your rules and lose money, you should be proud. That is a good loss. It is just the cost of doing business. So how do we practice this? I want you to stop looking at your P&L profit and loss every hour. Stop judging your success by what happened today. Instead, judge your success by blocks of 20 trades. Commit to taking 20 valid setups. Don't judge the first one. Don't judge the fifth one. Only after you have executed all 20, look at the result. By widening your time horizon, you silence the emotional volatility of the gambler. You allow the law of large numbers to take over. Remember, the market is a river of endless opportunities. You do not need to force the river. You just need to place your bucket in the water. When the probabilities are in your favor, you are not here to get a dopamine hit. You are not here to be right. You are here to execute an edge. Be the house. Be the cold, calculating, profitable machine that knows the math is on its side. However, there is a dark side to being too analytical. Sometimes we want to be the casino so badly that we overanalyze. We look for the perfect setup that guarantees a win. We freeze because we are afraid of the uncertainty. This leads to our next challenge, analysis paralysis. In the next session, we will discuss how to stop overthinking and start pulling the trigger. When the odds are in your favor,